Okay. So we will get to questions here in a second. We're going to cover the basics of reporting, take a second for questions, and if anybody needs a coffee refill, and then we'll move into the forms. So first, who must file? You'll remember there are two different forms, right? We're going to start talking the forms language. So everybody out there that's been tuning out because your board offers full single, we'll reel you back in right here. The 1094C form, that's your cover letter. That's the transmittal letter to the IRS, which says, hey, here's who we are. We're this, so-and-so public schools in Nebraska. We are submitting this because we're an applicable large employer. Here's our batch of 1095Cs. We gave a copy to our employees by January 31st, and now we're giving all of this to you, right? This 1094C transmittal letter, the cover letter, and it's got the due dates up here. You'll remember they always change it based on if you're filing on paper or filing online. I think most everybody now does the filing online. So the important date for that, number one, it's a Monday. So if you have a weekend scramble, if you're a procrastinator, that works out nicely. But it's due April 1st, 2019. The 1095C forms, right, the one where you have to give a copy to all of your full-time staff and a copy to the government, those are due to your full-time staff members by January 31st, 2019. Same as the W-2s, right? And although they don't always process it the same way, they need both of those forms to go to their accountant to get their taxes. So you have to give the 1095C to your employees by January 31st. That's a Thursday this year. But then the batch of those that you gave to all your full-time staff and the 1094C aren't due to the government if you file online until April 1st.
It's always confusing to me that they have these numbered in backwards order, right? Because you have to do the 1095s first in order to do the 1094s.
Right.
They've numbered it in terms of the order that the government processes it, right? So what they want to look at first is the 1094, which is like your summary sheet, and then they get to the detail. That's why the numbering's backwards. But the 1095 is due before the 1094. Well, not due to the feds, due to you have to have it done so you can give it to your staff.
Okay, so real quickly, just a couple of reminders on the forms.
Yeah, no, I was gonna say go back.
So they talk about fully insured versus self-insured. Just remember, for all of you on EHA, EHA is a fully insured plan. All of the B forms, you'll remember there's 1094 and 1095B forms. If you're on EHA, you don't need to worry about that. That's what Blue Cross is doing for you. If you're self-insured or if you're not with EHA, that's a question to ask for your providers. Or if you're self-insured, you got to think through that part of it, which isn't many people. But to the extent that you're filling out the forms, do not use any form if you're an EHA person that is a B form. You want 1094 and 1095Cs. And Blue Cross, as you probably have figured out by now, will issue the B level forms. That's where they talk about minimum essential coverage, minimum value, all those things that you don't need to worry about. That's where they give that information to your employees. So when your employee walks into their tax preparer's office, they will have their individual return. They will have your 1095C. They'll also have that form from Blue Cross. So if they're asking you for that other form, if you're diligent, because frankly, you don't want to hear questions all January and you get these done in the next couple of weeks, you can't force Blue Cross to do things any faster. So if they come to you and say, I still need the 1095B form, sorry, I don't do that. That's Blue Cross Blue Shield. So you have to give them the C forms. And this is the area that they indicate to the government that, oh yes, Jane Doe teacher enrolled her spouse and her kids in our plan. You don't tell that to the government, right? Blue Cross tells that to the government. So really until they can match all that stuff up, they don't get the full report, but you're only responsible for the C forms. And so we just want to make that note again. And with that,
so if you are one of the schools that's self-insured or has a carrier other than EHA, from what I'm reading, the potential penalties also roll to the providers, which is a whole other thing we don't want to talk about. But I think every carrier is issuing these forms. That's the point. So if you are a bookkeeper and you're filling out B forms, I think you're making them. You're doing something wrong. Good news. Good news. Once in a while, we give you good news.
Yeah. One more quick footnote on this. If you are, there are toggle marks and check boxes in all the different software, whether you're Apt2Fund, Software Unlimited, they help you with a lot of this stuff, which is great. Some are better than others in terms of their fidelity to the actual reporting rules, but make sure that they've got the right forms and information populated for you, because there was a school that submitted all of the B forms on accident because they'd had some toggle box checked incorrectly, and the government was like, what in the hell are you doing, right? This is not you. Why do we have 2 B forms and no C forms? So just to make sure if you're using, if your software company auto-populates or anything like that, great. If it saves you work, awesome. You should still be double checking that work, but make sure it's the C forms as well.
Yeah.
Okay. Okay, so we've got a couple of questions. I think we'll just work through them as we go. Do you want to?
Yeah, so the question on the chat was legally really interesting. The short answer is going to be easy. So the question is this: does the decision by the Texas court qualify as a qualifying event if an employee didn't take Blue Cross Blue Shield EHA insurance from you? Does the fact that the judge in Texas said Obamacare is unconstitutional, does that count as a qualifying event for purposes of hopping back into the pool? The answer is no, because the judge specifically said it's not an injunction, and it's not going to change anything at the moment right now. So I do not believe there is any carrier in the country that would say that's a qualifying event. And just a quick footnote, just thank your lucky stars that EHA has decided to let every year be open enrollment, because in the bad old days, it used to be that you picked when you got employed by the district, and if you picked wrong, you had to get divorced or have your spouse die for you to be able to get back in the plan. So if the employee that's asking you that question, like, can I get back in now? The bad news is no, the good news is, but this summer, there'll be another open enrollment period.
Yeah.
So that was mine. We'll just take turns.
Yeah, and I think the email was from the same person. It said, using the chat feature, remember, if you hover your mouse, so that I don't know if you can see it there, but on the top of the screen, you'll see over here, if you can see it a little bit, when you have those options, just click on the one that says chat, and you should be able to type your question in there if you want to. So that's that. Okay, and Karen's got a handful. We had a couple of good questions from here, which we'll save until last, because I think those may elicit more questions, but we've got some more.
Next text, if relooking at ALE, do you count teachers as full-time in summer months? Yes.
For your counting, when you're figuring out if you are an applicable large employer, if you're covered by Obamacare in the first place, you do not count teachers as full-time in the summer. You only count the people that actually are working during the summer. That's different than how you count for if the individual is full-time, because remember, for the individual calculations, we have to remove those periods where they have 4 or 5 or 6 or 12 weeks where they don't work any hours. So when you're figuring out, is my school at 50 employees or more for the applicable large employer counting, you get to treat the summer like it is actually treated, which is you could only have you, a couple administrators, maybe a couple custodians. You may have 10 people that are actually registering hours in the summer. So that's different than what your number is going to look like for October, when your large employer number for October, where you look at all your full-time plus FTE staff equivalents, is 70, right? You could have 70 in October and 10 in July. That's why they add those numbers up and divide by 12 to get your large employer number. That is totally and completely separate from the calculation of who gets a 1095-C and from who is full-time and could subject you to penalty, which is why this is terribly confusing. Because the government has two completely opposite ways of counting to figure out if the employer is covered by Obamacare in the first place. That's the ALE counting. If you have 150 employees, forget about it. If you were at 52 the last time you did it, it is worth recommitting all these stupid rules and figuring out what your large employer number is, because you may determine that for the 2017 calendar year, January through December, holy cow, we only averaged 49.9. What that means is for the 2018 calendar year, your large employer number was less than 50. You don't have to report for this year. That's the reason we brought it up again. But that is a completely separate type of calculation, which is going to confuse the heck out of everybody.
Well, and I hate to say, look at our spreadsheet, fill it out, and if you do that, you're golden. But the spreadsheet does do a lot of the brain work for you on that ALE calculation.
Two quick things before we move on. Number one, you all don't get paid enough. I believe that to my core. Number two, I promise I don't mean this to be shameless. My wife works for an entity that raises money for the University of Nebraska Foundation. Her busiest week of the year is the one between Christmas and New Year. I will be here grinding away. If you want to just say, put a pin in this and figure it out in a couple of weeks or next week, actually, I'm happy to help you talk through it more specifically and look at that sheet. But Karen's right. If you're wondering, are we covered by Obamacare as the school? Are we an applicable large employer? Put your data in the sheet. The sheet that we'll post will keep the data in from a school that did it. And so you'll be able to see what their numbers look like. use that to figure out if you're an applicable large employer first, if you think you're close. But for everybody else, forget that type of counting where we actually treat the summer like it is, and we'll move into how you actually count employees for 1095 reporting purposes.
Which is different.
We got a chat question.
Okay, next text question. We have the EHA plan, but since we don't have that many classified staff, they pay an extra 10% surcharge on their insurance. So is their plan still considered affordable even with the surcharge since it is an EHA plan? The question is, what could an employee, if an employee comes into your office tomorrow and says, I want the insurance, what are they going to pay? So if the 10% surcharge is included in what they were going to pay, that 10% counts against you.
Yep. For the cheapest single plan that they could enroll in, right?
The feds don't care how you got that extra 10% tacked on. They just care that it exists.
If I come in, yeah. So if I come in and say, I want the cheapest single plan you have, if I'm a single para, that's the number that you're basing affordability on when you're filling out the 1095 as well.
So there's that. Do we need to issue a 1095 to an employee who's contracted to work for us part-time through AmeriCorps? They are paid through our payroll as a living allowance, but only as part of the grant.
The reporting only applies to employees. It doesn't apply to independent contractors. So the question I think is always going to be, whether you believe it is an employee or not, are they a common law employee? That's what the IRS regulations defer to. They say, is that person a common law employee, right? If they got hurt at work, would they be covered by work comp, or do they have their own insurance, which would cover that? All of those indicators that would show the IRS if this person is a common law employee, entitled to a W-2 and all that.
So basically, do you issue them a W-2?
That's really the question. Yeah. So if you've got anybody who, it could be somebody from the ESU, right? There are a lot of ESU employees that walk around the school. You're not issuing them a W-2. You're probably paying the ESU for their time. That's an ESU employee, not a school employee. So the question is if you have the same setup through AmeriCorps.
Yeah, so there's no additional chat. You're looking at your screenshot of that chat.
No, there was one that came in. Maybe that's the qualifying of that one. Yeah. Okay, perfect. Okay, so the question we got here, and this is the one that we're going to get into now that we're digging into the forms. When we're figuring out who gets a 1095-C, which data set are we using? So we've got this explained in here a couple of times, but so it will repeat. For those of you that are like, okay, I get it, use it as a check for understanding. How's that for an education term? For those who are still thinking, I'm lost and wandering through the woods figuring out where to get this information, we'll cover it several times, and we'll have time for questions at the end. The short answer is, when you think of your reporting, when we pull up the 1095-C form, you will see that you're reporting from January through December of the tax year 2018, right? That is not how you insure people. You insure people from September through the end of August. So the short answer is, the data that indicates whether that person was full-time from January of 2018 and then each month of 2018 as you go is the data you're going to need. So let me use an example. Jane Doe Para is a single person, and you decided at the start of the 2017-18 school year that Jane Doe Para got insurance. So last school year, you had a new special ed student move into town, so she started working 38 hours a week on average. So when you did the math, Jane Doe Para was full-time when you were making this decision. Those numbers, though, to figure out if Jane Doe was going to get insurance in August starting in September of 2017, probably came from your 16-17 school year, right? Because that's the year that you looked at when you were figuring out, sitting there at your desk in July or August of 2017, figuring out if Jane Doe was full-time. If you use the look-back counting or the standard measurement period, it will be referred to in your Software Unlimited report. That data that you got is actually probably covering the 16-17 school year. So you looked at that and you said Jane Doe is now full-time, so we gave her insurance starting September 1, 2017. That insurance decision, deeming her full-time using the look-back period, stays with Jane Doe for the next school year. So when you get to January of 2018, which is the first box that all of you will fill out for your reporting this year, that data that made Jane Doe full-time in January because she got an offer of insurance in September is really from 16-17. But then when you started Jane Doe on insurance, you were also tracking data for the 17-18 school year when she received that insurance based on her full-time status. So now when you're filling out the form, you're going to get all the way from January through August with Jane Doe's full-time status you gave her starting in August or September of 2017. But now you've got another year's worth of data, right? And so your September, October, November, and December form boxes for the 1095 are probably going to come from the 17-18 school years worth of data. That might be a little confusing. I totally understand. It might be a lot confusing. We'll cover it again, but this is the downside, one of the downsides of how EHA runs its plan and how, frankly, the government allows you to do the counting if you elect to do it. For employers that are all on the calendar year, it's super easy, right? Schools are not.
You are by definition always going to be 6 months, sort of like laddering almost.
So another way to think about this conceptually is if you ask all of your employees to pay 20% or 50% of the single insurance if they get it, in September of 2018, that number went up, right? Because EHA increased the premiums. So that's the same notion, the same concept is that we've got 2 counting years, we've got 2 different full-time status years, we've got 2 different insurance years that are reported on these forms. I see some nodding, I see some glazing over, and that's fine. We will cover this again, I promise. We'll go through examples at the end, and so we can talk about what this would look like. But that's the short answer is, what data are we looking at to figure out who gets a 1095 form, the 1095-C? That data is actually going to depend on what data you use when you are making full-time status decisions for that particular employee. On the other hand, you've got a substitute teacher who you track their hours, but they only work a couple of days a week. But then, starting in February of 2018, that person took on a full-time sub because there was a maternity leave, right? So that person was never full-time for the school district up until February and March for a 12-week maternity leave where that person worked more than 130 hours. They're reporting, they still get the form, right, as an individual, because remember, you can be full-time during a look-back period, and you can be full-time if in any one month you hit 130 hours. The important thing is, no heads are gonna explode. If you use the look-back counting, and you've decided that Jane Doe Para actually was 29.9, then you don't give her a report for that reporting cycle, even if she worked 180 hours in some way. Because her full-time status, when you did the look-back counting, is either good or bad for Jane. But it doesn't change until the next year
So
when you do that full-time status.
she'll get credit for that 180-hour month when you're doing the math for the upcoming.
Correct.
I don't think many schools are using that method for this very reason, because you guys don't want to have to rejiggle it and take away someone's insurance offer.
No, right, that's what I'm saying. But the government believes that every, say, mid-July, all of you are looking at a snapshot of the preceding 12 months and making offer decisions on that basis.
Saying, do you get insurance
right?
next year or not?
That's because the government, frankly, exempted itself from all this stuff, which is pretty typical. But the fact of the matter is the government assumes that every summer you're doing this hours in the numerator, weeks in the denominator, moving out employment break periods. That's the assumption they're making. If you're assessing full-time status on an individual basis using the preceding year's data. So you may be looking at me saying, Bobby, I didn't do that. And my answer is that's okay.
That's okay.
No problem. Don't worry about it. Your software company probably has some of that baked in for you, whether you've asked for that or run that report or not. So don't freak out. Don't assume you're going to have to do all that counting by hand. It is possible to do. It's not the end of the world. But understand the government has been assuming this whole time that if you use the look back period, say 3 or 4 years ago, when your board was deciding what to do, the government's assuming that you've been doing that every year since. You may not have been, no problem. But somehow, some way, you're going to have to say to the government, this is why Jane Doe got a 1095, or this is why Jane Doe did not get a 1095, right? That's somehow that has to happen, which is why we're taking the time to cover this confusing stuff, because one way or another, we've got to make that assertion to the government.